Alrighty, what is going on, everybody? Welcome back to another CYPRX banger. In today's video, we're going to be jumping in, discussing and talking about the future potential of this digital asset landscape, covering some things that we have been discussing for some time on the CYPRX platform, which is the future digital asset landscape and utility-driven cycle. Are we on the cusp of potentially experiencing that after regulations come in and financial institutions are more comfortable adopting these digital assets, right? So we're going to start here. Now I'm going to go through. I have some video clips to collaborate with the articles in which I'm going to be reading to you on the fundamental pieces that we're going to cover today. So make sure that you stick around to the end of this video breakdown. But researchers like myself and many others out there have been reiterating the point to you all that in the future, at some point in time, again, none of us can paint a beautiful picture on when this is going to be, but we are most likely going to experience mass adoption, financial institutions onboarding into this digital asset landscape, actually adopting these digital assets on a massive scale. We are going to see utility-driven assets that actually provide real-world value and have real-world use case being utilized outside of just speculative trading.
So we've seen this ecosystem, the blockchain ecosystem, evolve over the past decade and a bit. The narratives have come and gone. We started up with the Bitcoin narrative. We moved through the ICO narrative, moved to NFTs, and now we're seeing all the hype has been and left the system, and we're actually now seeing real value, real fundamentals becoming the dominant narrative as it's moving in.
And we're starting to see that via the mainstream narrative in articles like this from Forbes, which we'll get into in just one second. But I want to go back to April 9th, 2024. This is directly from the Ripple website. And they go on to put out this piece that says how MiCA and European digital asset regulations are paving the way for institutional adoption, right? And we've covered this in previous video breakdowns. There has been multiple panelists from systemically important banks and large organizations say that once regulations come in, financial institutions will be much more comfortable onboarding into this space.
So I think the European Union has been quite innovative in MiCA, right? Trying to lead the way here, and I agree with what Stefan was saying. So you have a lot of players that have interest in this space, but to do something here, they need the regulatory clarity. Okay, maybe not the specifics, but at least the big picture. You need to have some comfort to make sure that you don't get into something and then you need to adjust. So I think that you have a number of players that will end up entering this market once MiCA is live. Okay.
And this article just reiterates that point. This year, the groundbreaking crypto regulation regime will take effect in the European Union, known as the Markets and Crypto Asset Regulation, or the MiCA. It will immediately become a game-changing framework for the industry, likely to influence similar crypto asset regulation around the world. Then it continues to say, while these regulations for the crypto asset market have teeth for non-compliance, potential million-euro penalties, the added transparency, uniformity, and certainty position MiCA regulation as a catalyst for institutional adoption. It's therefore not surprising that it has broadly been well received by the European Union's crypto industry and should inspire confidence among a wide range of potential users. So we are definitely looking forward to, at least utility-driven investors are looking forward to when these regulations actually come into play, right? And I find it interesting that individual researchers like myself and many others out there for the past couple of years have been telling you all that regulations will bring financial institutions into the space. And now we're seeing mainstream articles from Forbes talk about this, right? This is from April 24th, 2024, shortly after Ripple put this article out. And we can see that it reads, large European banks are now considering entering into the crypto industry based on the clarity provided by the block's adoption of the Markets and Crypto Asset Regulation. MiCA, what have we been trying and attempting to tell you all? That clear regulations will allow financial institutions to mitigate risk, be regulatory compliant, and actually be comfortable onboarding into this space.
We're pretty good on freedom of expression in this country, at least. Other countries, less sterling track record. But it's a hard argument to say a lot of the activity on these chains is like purely expression that's protected under the First Amendment. I think you are going to see down the road the regulation of the development and use of certain software if software really becomes the new intermediator. And the question is, well, who gets regulated under what conditions? DAOs, obviously, and decentralized organizations open a big old can of worms. But if it's a company making money off of software they maintain and that software is being used, like that's a good starting place for, and then the question becomes like, well, what does that regulatory framework look like for that type of software? And I think it's dictated by the activity the software is performing. And it doesn't have to look, but the point is, whatever it is, it's going to look entirely different in many respects than the current regulatory regime. But I think that is probably where we're ending up. And I think you're also going to see, I think the trend is towards the base protocols and the basic functioning of those base protocols being considered different enough in kind where they are not subject to that regulation. And I think that actually probably gets us to a pretty good place. And one which would engender, I think, broader participation by regulated entities like banks and financial institutions in the space, which is obviously going to be very important.
Following MiCA's approval, European banks are more willing to create crypto services despite requiring further technical knowledge and infrastructure. As a result, they are seeking partnerships with well-acquainted organizations to navigate the crypto terrain effectively. For instance, Germany's large federal bank I'm going to butcher that one. I'm just going to leave it there. LBBW, boasting over 355 billion in assets under management, has opted to provide cryptocurrency custodial services in collaboration with Bitpanda Exchange. Under the agreement, LBBW and Bitpanda will extend crypto custody services to corporate and institutional clients, commencing in the second half of 2024. Again, hint. Key dates right there, second half of 2024. I don't know how people can be bearish on this market. Again, short term, there may be a few bumps in the road, but zooming out long term, 2 to 3 years from now, this market is going to look like a freaking hockey stick once these financial institutions onboard into the space. You have been warned.
And the same can be said for the examples that David gave around the 24/7 movement of cash. So I think once they are rubber stamped by compliance internally at those sorts of institutions, the genuine volumes you could see could very much be like a hockey stick. And so I think the native cryptocurrency market is obviously there's been the rally over the last few days, but sort of hovering around 1 trillion. I think you'll quickly see the market cap of, say, tokenized securities, tokenized cash, surpass that pretty quickly over the sort of next 3, 4, 5 years.
And now we're seeing mainstream articles like Forbes talk about this. Some things, again, that researchers have been covering for the longest time. So I find that interesting that the mainstream is starting to pick up the idea of once regulations come into play, financial institutions will be a lot more comfortable onboarding into the space. Here is a very interesting digital asset summit that is coming up. And again, devil's in the details, right? Look at all these large organizations. So here we have the digital transformation, i.e. keywords, some things that we've been talking about here at CYPRX for the longest time. We are in the fourth industrial revolution. Digital transformation is happening with or without you, right? This is the digital transformation in banking and insurance global conference summit taking place. I believe the next series is in June. And I just want you all to take a look, okay? Look at the massive list of banks and financial institutions, all right? Systemically important organizations. We got Standard Chartered, Citi, HSBC, UBS, Finastra, Wells Fargo. I mean, you name it, it's on here, okay? And then we go and look at what they're going to be talking about. How AI is revolutionizing the landscape of embedded finance, cybersecurity, harnessing real-time data, the latest trends in digital assets, crypto, and CBDC payments. So all of these large financial institutions joining and collaborating together to talk about crypto, and people think that this space, the crypto industry as a whole, is dead. It's not. Like, you really got to wake up. Again, this is what the mainstream is never going to show you. They're never going to show you that these large financial organizations are all collaborating and going to a summit together to talk about crypto, right? They want you shaken out because they know the future potential of this digital asset landscape. Now, I want to head over here to a couple of other documents from some large organizations, and I want to read through some of the PDFs and show you all what they are saying about the digital asset landscape. So let's take our attention over here to a fundamental piece, first from KPMG. All right. So if you're not too familiar with KPMG, again, just take it upon yourself and go and research who KPMG actually is. But this was a fundamental piece, again, shared in the CYPRX private research chat from 2024. So it is updated, labeled Southern Africa Banking Survey Vision 2030. And I like pulling fundamentals from all over the globe. So it doesn't really matter what jurisdiction you're in. You can see that this is happening on a massive global scale. And we're just going to read some interesting highlights here. All right. Now it says, the African banking landscape is undergoing a metamorphosis driven by technology, a vibrant fintech scene, and an insatiable demand for convenient, personalized financial services. What? Right? So again, it's going on to confirm that the banking industry is undergoing a metamorphosis. That's a massive transformation. As we scroll down, it continues to read, the future is destined to be borderless. A global community demands a cornerstone of trust, moving further towards an environment where trust is seamless and transactions even more so. Building a reputation for security and transparency in a digital world must be a priority for all of us, right? I highlighted that because, again, they tell you these things in advance. This is again from KPMG. And in the document, they tell you that adhering to a digital world must be a priority for all of us, yet this will fly right over people's head. And 3 to 5 years from now, this document will age well, and the people that paid attention to detail took advantage of the opportunities in the now, researched artificial intelligence, crypto, stable coins, all the investment opportunities in the now will benefit most likely in the long term, right? Now, as we scroll down, I just want to read these last two highlights right here where it talks about keyword opportunities, right? You guys know that here on the CYPRX platform, we like that word. Throughout our analysis of AI and digital innovation, one thing has rung true. The technologies we come to understand today are harboring opportunities and mere symbols of what is yet to come, right? That is a nasty little gem right there because we know, like I mentioned to you all, once regulations are implemented, financial institutions are more comfortable with the risk and they can actually onboard into this space via sound legal regulations. It's going to be absolutely mind-blowing just to see the adoption curve of this digital asset ecosystem long term. And they're telling you all this in the documents. Okay. Blockchain technologies, while the first publicly known iteration of blockchain centered on cryptocurrency such as Bitcoin, the inherent opportunities for innovation have quickly come to the fore. Between private sector investments, public projects, and nonprofit initiatives, the use cases for blockchain technologies grow every day. At the forefront of these use cases and their potential lies the inherent opportunity of utility. Look at that word right there. The utility potential within the blockchain technologies extends to identity management, fraud management, risk management, supply chain, and then the list goes on, right? But the reason why I'm highlighting this is because they mention the terminology utility. And this is again in a KPMG document, right? So you should be focused on, again, in my personal opinion, and what we're focused on here at CYPRX is utility-driven assets, digital assets that actually have real-world utility and can provide value to financial organizations, enterprises, and the list goes on. So that was very interesting from KPMG, just highlighting utility, highlighting digital transformation, and that you should be paying attention. And they tell you all this stuff in their updated documents. This is from 2024. Now we have another fundamental piece. This is from April 2024, and it goes on to mention a new payments paradigm, right? How many times have we heard that key vocabulary word before? A paradigm shift, right? Well, if we scroll right down here, one little tiny highlight that I wanted to point out from this HSBC PDF is it goes on to say, in treasury and payments, there has been more advanced exploration around DLT than AI in recent years. But with the recent developments in AI, this technology will quickly catch up, and ultimately these two technologies will become joined forces driving fundamental change in treasury and the broader financial system. What have we shown you all in previous video breakdowns?
To answer your question, I fundamentally believe that there are two major revolutions taking place in technology. Distributed computing, Web3 crypto, and then machine learning, AI, AGI. And I think as we go forward, those two technologies are going to increasingly intertwine and intersect with each other.
Right. I look forward to 24, 25. How do we use programmable money? Who is going to be using it? To me, the obvious answer is AI, right? Nobody's going to give AI a bank account, but it's going to be using crypto.
Right? Artificial intelligence and cryptocurrency will coexist in a digital world together. Artificial intelligence will most likely utilize cryptocurrency assets in the future. You should be paying attention. So again, these are all fundamental pieces that the mainstream media will never ever show you. They won't bring to light. They won't bring to your attention. As always, stay focused, zoom out, understand the long-term potential of this digital asset ecosystem. And with that being said, many blessings to you guys, and I will see you all in the next video breakdown.